Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energy, crude oil futures, crude oil down over 1.25% on the lows. That is now 3 consecutive down days for crude oil. 5 of the last 6 days have been down days, lower close than it opened, and 8 of the last 11 have been down days. So even though crude, if you look at a crude chart, it's been pretty much sideways, it's been kind of to the weak side of that sideways channel, if that makes any sense. If you imagine a channel where there's a couple of down moves and then one big up move, that big up move happened on Friday where we're up over 3.5% with the perception of increased demand and stronger global economies based off of that really strong U.S. non-farm payrolls number, but now we've taken back most of that, getting close to that $60 level again, and we'll talk about that in a second. Crude oil tends to have an inverse correlation to the dollar, similar to all other commodities like gold, like copper, like even natural gas outside of seasonality. But in the very short term, that correlation seems to have broken down. We've actually got the 3rd consecutive down day for the dollar, and crude oil's down as well. And in the very short term, we've seen basically 6 of the last 11 days down in the dollar, and as I mentioned, 8 of the last 11 down in crude oil. So it seems, at least in the short term, that correlation has broken down. There's a ton of history behind that correlation, and it really has to do with the dollar index just being below 90, hasn't really collapsed lower. So that correlation doesn't hold for smaller moves, and we're seeing that over the last few days. But as I mentioned, we approached 60 and again did not break it. $60 seems to be holding, seems to be sort of this line in the sand. $60 has held support, and it is an area the traders have been talking about and looking at. Now, typically when a level holds multiple times, it's stronger and stronger support. It's viewed as that support being stronger. But really what ends up happening is the number of times it holds, the number of times the perception is stronger that it's support. If and when that support is broken, the down move is more exaggerated. So $60 has held, but the more times that it holds, keep in mind that if we break it, we're going to get a more exaggerated move than we would have had it only held 1 or 2 times. The seasonality is still in play for a lower move toward the end of March, and then a rally from there on up to about the beginning of June. But a weaker crude oil contract today, down over 1.25%. This is Bob Iaccino talking crude oil from the CME Group trading floor in Chicago.